Well, what's most attractive right now is what's beaten down the most, and that's largely Chinese stocks, particularly those that have a cyclical bent, and that's just because folks have kind of given up hope on 2019. In China right now, the catchphrase is winter is coming, sentiment is very, very poor. But I think as we just saw in the data, the China property data there, home prices are rising, and importantly, this is a government that is stimulating that market. They recently sold land in Beijing without price caps for the apartments that will eventually be sold there. So they're clearly easing in a variety of ways, none of which are big bang stimulus, but collectively, it's starting to add up.
And in terms of the cyclical plays there, what's really attractive for you guys?
Well, the most attractive one to me right now is the auto sector. And historically, I have not invested here very much because, of course, it involves international trade and is cyclical stocks that you can't buy and hold for many years. But right now, negativity is about as bad as I've ever seen it, and valuations about as low as they've ever been. And basically what's happening is Chinese auto market is going from being one of structural growth that just grew year after year after year to one that's now cyclical, like auto markets elsewhere in the world. But the notion that growth is over is just really misplaced. When you look at auto penetration in China, the number of cars per 1,000 people is less than 200. By comparison, Taiwan's at about 350, Korea's at 500, Japan's at 600. So we believe we have many more years of growth to come, though clearly the near term is, visibility isn't that good and the government hasn't stimulated yet. But even there, they're starting to make noises that stimulus is in the cards.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.